Good morning. Today we're going to talk about Chapter 3, just a portion of Chapter 3. We're going to talk about unmodified reports, only unmodified reports. And we'll do modified reports tomorrow and the next day. Give me a minute here. I need to get, there we go. I got my laser pointer ready. So I want you to study the first 4 pages of the chapter. Then there's 5 pages on the PCAOB reports for public companies. Just read that. Don't bother to study it. Just read it once. And then the last 13 pages, your study. We've got on the test, the biggies are assertions, the 6 assertions we've talked about, the definitions that we've talked about. Now, as you prepare for the test, remember on the old test, 500 has changed since the old test. So there'll be questions very similar on this test, but the answers will be different because 500 changed. Then we've got audit reports, which we're going to do today. Those are the 3 big items on the upcoming test. The phases of the audit, according to the book, are plan and design the audit approach. I think of that as 315. Then we either perform test of controls or substantive test, and that's 500. So that's evidence. Phase 2 and 3 are evidence. The evidence may be different in phase 2 than phase 3, but it's evidence. And then 700, the audit report, which is what we're going to start covering today. Page 71, table 3.2 is excellent. We're going to talk about this upper portion today. That's all we're going to talk about. We're going to talk about accounting principles not consistently applied. We're going to talk about substantial doubt about going concern, an emphasis of matter. We're not going to talk about the other 2. So that's what we're going to cover today. 700, it's one of the thou shalt knows, the objective of the auditor. They'll start the objective of the auditor. Form an opinion on the financial statements based on an evaluation of the audit evidence. Evidence-based decisions. So we're going to form our opinion on the financial statements based on the audit evidence. Express clearly that opinion on the financial statements through a written report that also describes the basis for the opinion. So we've got a written report that also includes a description of the basis for the opinion. That's kind of important. Here's the public company audit report. Just read it once. That's not the one we're going to play with. Page 49. This is for private companies. This is AICPA. This is where we're going to spend all of our time in this class. The sections of the audit report for a private company, the opinion, basis for opinion, if needed, an emphasis of matter. We're going to use the emphasis of matter today a lot. Then we got responsibilities of management and the auditor's responsibility. What report do we use? Everything's okay. The financial statements are fairly presented, no material misstatements. Then we'd issue the standard report. And I'm going to base how do I learn, how do I teach about audit reports? It's based on this standard report. So I ask these questions. Have we audited the financial statements? Do the financial statements, in our opinion, present fairly in all material respects? Have we been able to conduct our audit in accordance with generally accepted auditing standards? Is the evidence we've obtained sufficient and appropriate to provide a basis for our opinion? Management's responsibility never changes. Have we obtained reasonable assurance the financial statements are free of material misstatement? Okay. And then, is there substantial doubt about the company's ability to continue as a going concern? So These are the questions I look at to make my decisions. And what I'm really saying is, do I need to change this paragraph? Do I need to change this paragraph? Do I need to change this section? Okay. So we'll walk through. Now here's Tad's outline of what's going on. Everything's okay. We issue an unmodified opinion. Standard reports are unmodified opinions. Okay. However, we may add an emphasis of matter paragraph. If we add an emphasis of matter paragraph, the opinion is still unmodified, but it's no longer a standard report. So you got that standard report is the report we just looked at. Unmodified opinion is where we don't change the opinion paragraph. Okay, so think that through as we go through here. And then we've got, tomorrow we're going to talk about material misstatements, and then we're going to talk about auditing problems. The company refuses to adopt Accounting Standard Update 20516. They argue the amounts are immaterial, very immaterial. We agree that the amounts are immaterial. What opinion will you issue? Have we audited? Yes. Do the financial statements, in our opinion, present fairly in all material respects? Yes. Okay. Have we conducted our audit in accordance? Yes. Is the audit evidence sufficient and appropriate to provide a basis for our opinion? Yes. Have we obtained reasonable assurance the financial statements are free of material mistakes? Yes. Does the problem mention any concern about the company's ability to continue as a going concern? No. Okay, so we're going to issue an unmodified opinion, a standard report. There's no need to change anything. The financial statements are fairly presented, but the company will probably go bankrupt. The statements clearly indicate the company is in serious financial trouble, but okay. Have we audited the financial statements? Yes. Do the financial statements fairly present in all material respects? Yes. Did we conduct our audit in accordance with auditing standards? Yes. Do we believe the evidence we have is sufficient and appropriate to provide a basis for our opinion? Yes. Do we have reasonable assurance the financial statements are free of material misstatement? Yes. But we have substantial doubt about the company's ability to continue as a going concern. Have we audited the financial statements? Yes. In our opinion, the financial statements do present fairly. Yes. Did we conduct our audit in accordance with general accepted? Yes. But we think we're going to get sued. When this company goes bankrupt, they're going to sue the auditors. It's Chapter 5, by the way. So we're going to add an emphasis of matter paragraph here. And in the emphasis of matter, we're going to explain, please go to footnote 17 that talks about the problems. Yeah, you should be able to tell from the financial statements that the company's in great financial distress. But if you can't, make sure you read financial footnote 17 because this company's probably going to go bankrupt. Now, the question mark is over here is I'm not 100% sure this is where we would put the emphasis of matter paragraph. I believe so, but I can't find any documentation that tells me where to put it. But this is where we always put emphasis of matter paragraphs, so this is where we're going to put it in this class. 708, consistency of financial statements. Okay, you don't have to memorize this one, just be aware of it. Evaluate the consistency of the financial statements for the periods presented Communicate in the audit report when the comparability of financial statements between periods has been materially affected by a change in accounting principle or by adjustments to correct material misstatements in a previous period. So we're going to talk about change in accounting principles for the most part, but it also reports and change in reporting entities if they bought another company, correction of prior period errors. We don't need to report change in estimates. So change in accounting principles, but not change in estimates. The company utilizes Accounting Standard Update 2019-12 for the year 2021 under audit. Different accounting principles are used in 2021 than were used in 2020 because ASU 2019-12 didn't become effective until years beginning after December 15, 2020. So 2019 was not applicable for the year 2020, but it is required for the year 2021. So one of the things that was always hard for me to get through my head is 2021, the financial statements for 2021 comply with general accepted accounting principles. The financial statements for 2020 comply with general accepted accounting principles. However, the accounting principles are different in 2021 than they were in 2020. So this is, yes, they do conform to GAAP, but GAAP changed. That was a hard concept for me to get through my head. Yes, we've audited. Yes, we believe the financial statements present fairly in all material respects. Yes, we were able to conduct our audit in accordance with generally accepted auditing standards. Yes, we believe our audit evidence is sufficient and appropriate to provide a basis for our opinion. So we don't need to modify our opinion. It's fine. We agree with all that. Yes, we think we have reasonable assurance the financial statements are free of material misstatement. But there's an auditing standard that says, wait a minute, if you use different accounting principles in 2021 than you did in 2020, even though both years comply with general accepted accounting principles, we want to make sure that the investor, the user of the financial statements knows, well, there's been a change from 2020 to 2021. Okay. So we're going to add emphasis of matter. Now notice we add that below the basis for opinion. So notice where it is. The client faces a huge environmental liability, very material. It's probable they're going to incur a very large loss. They can't estimate the loss, but everybody's sure it's going to be material. They've included a footnote to discuss this loss, but you want to make sure investors read that footnote. So again, we go through, yes, we audited. Yes, they present fairly. Yes, we conducted our audit in accordance with general accepted auditing standards. We never changed management. Yes, we obtained reasonable assurance the financial statements are free. But we're going to add an emphasis of matter paragraph. Okay, and we're going to direct the investor to the footnote that discusses this loss. Unmodified opinion. No changes to the opinion or the basis opinion report, but there is an emphasis of matter section added. It's not a standard report, but the opinion is not modified. Make sure you work that through your head. Right? Okay, so here's Tad's little outline. All we've talked about today is in this red box. We didn't modify the we have audited. We didn't need to modify the in our opinion. We didn't need to change the basis for opinion. We did add an emphasis of matter. And the three issues we covered were consistency, where they used different accounting principles this year than last year, emphasis of matter, because there's probably going to be a big lawsuit, going concern, because they're probably going to go bankrupt. Management's responsibility section never changes, and when we're issuing an unmodified report, the auditor's responsibility section doesn't change. So this is just Tad's little reminder of what's going on here. The book talks about, and rightfully the book talks about Rule 320, justified departures from GAAP. I'm not going to talk about it because it basically never happens. I'm not going into that, but there is a justified departure from GAAP. Tomorrow we're going to discuss audit reports for material misstatements. I'll see you tomorrow. Have a good day.